Hey everyone, welcome to my YouTube channel. Dave Genderos here. This channel's focus is ways to generate wealth. I share videos on the things I'm doing to generate streams of income, and you can take that information, do your own research, and figure out if it's right for you. In the video description, make sure you look. There'll be timestamps and other information in there, such as other topics for videos, other opportunities I'm involved in that you could take a look at and see if it's interesting to you. Other videos related to the topic that we're discussing today, and an income disclaimer, just basically making it clear to you guys that I'm not a financial advisor. If you need financial advice, go to an official person that does that kind of stuff. I'm just a guy on YouTube sharing what I'm doing to generate streams of income online, and you have to decide for yourself. I'm sharing the information, making sure that you have the information to make an educated decision. But it's not right for everybody, so you have to decide what's right for you and what's not right for you. So consider subscribing and liking my channel. When we hit 2,000 as the next goal of subscribers, I'm going to do a crypto giveaway, and you're going to have to know that the video comes out, putting that giveaway contest in play, and you'll have to do some kind of comment in the video description, in the video, to be part of that random draw. So with that being said, just consider subscribing, becoming part of the community here. We're growing very good so far, over 100 new subscribers within the last month, and it seems to be picking up steam. So the videos are starting to get more views. I know you guys like crypto, so that's what we're going to talk about today. I haven't talked about it in a couple days, going on 4 days now, so we're going to refresh the Cardano, Bitcoin, Ethereum, and Chainlink charts with the latest information and see where we are and where it could go. Again, practice, practice, practice. Repeat what I'm doing on your charts so that you could become more familiar with technical analysis and how to spot patterns, support and resistance lines, and mark up the chart so that you can wait for a price action to fall into your trap as opposed to you falling in the price action trap. Right? So don't blindly buy and sell without knowing what's going on. Just doing a little bit of a technical analysis will give you a whole new vision on what's going on with the cryptos. Now, again, a lot of the cryptos move the same way. You can see this is sideways. You can see this is sideways. Then you got others that kind of follow each other. This one's going up. This one's going up. So you got to figure out which ones are kind of correlated to each other, which ones move together, which ones move in opposite. So you got to kind of just practice and be part of the charts to see how they interact with each other, because in the end, people are chasing money the same way. So everyone's, getting out of Bitcoin, dumping in alts, or, are they going for the small caps? And, you can start seeing patterns on the higher level with where money is flowing and what's the hot topic of the week, right? So let's get into Cardano. It kind of broke out of this channel and is just going sideways. So really, this channel is no longer in play. There was no volume here, so we could just let's get rid of all this and let's clean the chart and kind of see where we are today and go from there. A lot of these targets, I'm going to leave them here, because they're based on, actually, I'll just get rid of them all. We'll start fresh. Let's just start fresh and see where we are. Let's get a gauge on what price action is doing. And from there, we can start drawing out some targets on the upside and the downside. So I'm going to leave that there. I'm going to leave that there. These are major resistance points, so I'm going to leave the red lines there, because support and resistance seems to be holding pretty good. Again, there seems to be something happening down in this area as well. Now, we can get crazy with putting a lot of support and resistance lines on here, but when you start seeing reactions at certain levels over and over again, again, I draw it as lines, but really, it's probably a zone, right? The zone seems to be a lot of resistance right now for this coin. And we still have a pattern here all the way up here. This is it's gone so far away from where this pattern showed up that this pattern becomes non-existent anymore. The pattern didn't play out. They don't always play out. And all you can do is put it on the chart and see what happens, and then go from there after you see it's not happening. So this is where we are right now. Seems to be a pretty tight, range here of consolidation, which is good for the overall price. Do something like that. Maybe move this up a little bit. So that's a consolidation range, which is good because it's building a new base. This is going to become, right now it's resistance on the upside, but it's going to become support when it finally breaks through. On the shorter time frame, let me get rid of this moving average. Just get rid of this stuff. Okay, so this is basically where we are. Let's go up to a daily. Oh, there's more stuff on this chart. I think there's an easier way to do it. Okay. Well, on a bigger scheme, we could kind of see a upward going trend line here. This is on a daily, so this is a high time frame. You draw something like that, and then you could see that we have something going on here. We might be in a ascending triangle, which is very bullish because it's higher highs, higher highs, higher highs. We got these the noise in between here. Let me just clean. Let me get rid of some of this stuff. It's too much on here. I'm just going to get rid of all these. When you really clean up the chart, this is what it really looks like. You can say that maybe it's more like that if you want to go to the extents of these wicks. You want to cut as many as you can, so you got more touch points. You got a touch point, touch point, touch point. A little bit of a dip through, a little bit of a dip through, but this is the strong trend. As well, you could decide if you want to go with the wicks or you want to go with the bodies. Somewhere in this range, there seems to be resistance up here, so we could leave this here like this, but we can go back to having a range. I think it makes sense here to have a range because it's not just a single point. You got wicks, wicks, wicks. You got, body candle in here, but you got, top is topped out here, more wicks, so this is kind of like the resistance zone on the top side. And I've drawn this in the past. I mean, what I've shown in the past is something like this: two trend lines with some squigglies in between here, right? Like lines here showing that this is a resistance range. So what I would be doing is, if you take the measured move from the base of this area, you want to take it from the high to the low here. And this is the breakout pattern range. When it finally breaks out, which is usually like 80% of the run here, we'll see ideally this pattern go and hit these targets. So right now, top side is around $1.80. Downside, if it gets that low, is 75 cents. So that's basically it at the higher time frame. So now we drive down a little bit lower. Let me see what's happening on the lower time frame. You can see you know, the wicks on the daily are now candles on the lower time frame. So again, that's why I said there's a range. You know, you could see this is a double top. This is an M, which is kind of bad for Cardano because that signals maybe a trend reversal downward. Although the peaks are pretty close to each other, they're not really tapered down like I mentioned in a previous video. When you see something like this, it typically changes direction from an upward going momentum to downward. Here we have an M that's pretty much a double top, equal in size, with a little bit of a tip downward, but not much. I mean, if you look here, I mean, this is all noise. Like, you're talking about fractions of a penny or a couple pennies of a difference. So really, this is a legit double top, which can signal a downward, a change in direction downward, but the fact that it's not tapered down, like, you know, last time it pushed higher, came down. Now, when it tried to push higher, sellers started selling before it reached this previous high. So this is a good sign that, you know, there's a chance that it can hit another top. The good news is that we're having lower bottoms. So this is an ascending triangle. You know, if you want to use the tool, you can throw a triangle on here, you know, to visualize it a different way. You know, you can see that. So you can use this tool to do that, or you could just draw some lines like I did. So I'll get rid of this just to keep it clean, so there's not too much on here. So what we're waiting for now is we're waiting for the breakout. We're waiting for price action to give us an indication of where it's headed. Really nothing else. You can throw a pitchfork on here if you want, from like here to here, and just kind of tweak this so you can kind of see where things may be headed. You can also, let's see, there's a lot of wicks here, so it's going to be hard to do, and it's pretty much sideways. So this is the only pitchfork. If I were to put it on here, I mean, you could decide if you want to hit that wick over there, or if you want to cross. The conservative way would be to do it like that. And again, you know, it's easier to draw with the pitchfork because you're guaranteed straight lines. When I do my trend lines, you know, you can kind of see how this pitchfork kind of takes the place of the trend line, but you can tweak your trend line to represent the, you know, the pitchfork's pitch. That's kind of funny. I'm having some technical difficulties here today, but let's work through them. All right, so yeah, you can see here, depending on where the breakout happens, you know, it might fall within the range of the pitchfork as a high end. So again, when the breakout happens, you're gonna look for some upward side rejection. So you're gonna have a rejection at this double top. So you want to put a little box up here, as depending on where the breakout happens of this ascending triangle, you might want to take a little bit off the table when it hits here. And then what you want to do is you want to if you take the pivot from this low to high, from here to here, you have another area right here of algo targets, and then you could also put a range of possible targets up in here as another level of sales. And of course you have the pattern target. Let's just split the difference, put it in the middle, maybe make this a little smaller, because you don't really know. You don't know what's up, where the resistance is going to kick in here. You just know that the pattern target's right there. So pattern target's around $1.80 or so. You got the algo target around $1.59. You got the previous peaks here, which I didn't really draw too well. Just come down a little bit. somewhere in maybe the 49, between 47 and 49. There's going to be resistance here because of this. You pull this back here. You get the wicks, you know, from the bottom of that wick to the top of that wick. That's the range of possible resistance that you're going to see. Again, so you have some targets on the upside, and then you got to do the same thing for the downside. So on the downside, you know, you're gonna see hesitation here at this previous peak swing low. So you know, you can do the same kind of thing. Hit those wicks there and hit that bottom wick there and draw a little bit of a range on the downside. So that's one of the targets. And then if you look back here, let's see, yeah, that's pretty much there. I mean, you might have something happening here, you know, because you got some wicks there, you got a wick there, you got a wick there. So this may become resistance on the downside, you know, and then just like the top side, you have the targets down here, you know, somewhere in the middle of this 0.414 and 618. So those are three downside targets. You know, I really don't think it's going to come down to this low level here. You know, you got a lot of resistance at this 85 to 80. So somewhere, you know, I think 80 would be the lowest, but this is the target. So, you know, this falls within the range of the 1.414 and the 168. So this is the pattern target if it breaks down. If it breaks up, the pattern target's right here at basically 78, 79. Conservative, you might want to just sell at 78. So again, you know, don't try to hit a home run, take profits on the way out. You know, just like you scaled in on the trade up here as it's breaking out. Now again, as always, this is a typical pattern. We're here, so we might see, you know, let me get rid of this before I start drawing too much here. Get rid of this, get rid of this. So on this triangle pattern, to simplify, let's just go with that as the breakout level. Get rid of this. Now, when this breaks out of this level right here, in fact, let's just do this. Let's just draw it with the tool. That way we can really see the area of this pattern. So let's just get rid of this. All right. So when you draw this out, and you have you can make this a little flatter. When it breaks out over here, again, you're going to wait for it to come up, come down, check. Make sure this resistance now becomes support. And when it starts pushing away, this right here might be, you know, an area where you might want to sell 25% of your position, right? And then over here might be another 25% sell. And here might be another 25% sell. And along the way of you selling these parts of your position, whatever your position is, you have to move your stop loss. So initially when you get into the trade, your stop loss is going to be here. When it breaks through here and tests here and starts moving higher again, you could decide to either move it to break even, or you could even bring it somewhere below here to lock in a guaranteed profit. So here you won't lose anything. Here you're going to guarantee yourself something out of the trade. And then as it continues to move higher, you do the same thing. You put the stop loss under here. And each time you're increasing your guaranteed profit by the entry to this stop loss. So you're making it more profitable along the way as price action moves away from your entry. And again, you know, same thing here. When it hits and checks. Now it might not, it's going to go up and down along the way in between these, but you know, for all you know, it might bounce in between here a little bit before it shoots past it again. It might consolidate, break in, consolidate, break out. You know, you're not going to just see up, down, up, down, up, down within an hour. You know, there's going to be patterns that are developed over time, and realistically, this push, you know, right here to this target might be fine, and then it might follow this upward channel before it does this final push higher. But along the way, you bring your stop loss higher, and then when it's up here, now you only have 25% of your trade left. So this up here would be your last 25%. Maybe this is where you finally get out, because after this, we might, you know, at some point we're going to see a retreat and a retracement, and then you can set yourself up for the next trade. But at this point, if it decides to turn and go south now, you have your stop loss here, so you're not losing money. You've guaranteed yourself a profit from here to here. And if you continue allowing that last 25% to stay in the trade, you know, you might see price come up to here. And it might break through, but it might also come back down. And if you have your stop loss set below here, now you got your even bigger guaranteed profit. So, you know, just like you're going to dollar cost average into a position down here, you're going to dollar cost average out of a position. So along the way, you're locking in a little bit of profit, a little bit more of a profit, a little bit more of a profit. Finally, either the final profit, you know, all these 25% are going to add up. You're going to make a little bit here, you're going to make a little bit more here, you're going to make a little bit more here. And overall, this overall trade is going to be profitable for you, you know, and in each area, like for example, this trade will be 5%. This one, the next one, if you get out at the next level, you'll make 15% on that 25% of your trade. Then on the next one, you're going to make 28% on that next 25%. And then finally, if you wait until, you know, if you're able to stay in until it goes this high, you're going to make 50% on that 25%. So when you start averaging you know, when you figure out the profits per percentage of your position that you sold, you know, you're going to have somewhere between a 56% and somewhere between 5% and 50%. So your average profit of this trade is going to be probably closer to somewhere in the middle here, like, you know, basically the median. Somewhere maybe around 30% is going to be your average for the overall trade. So if you went in with $1,000, you're going to make $300, right? So just be smart about it. Move your stop loss, lock in your profits. If price decides to turn, nothing just goes straight up, and you could kind of get in, get out, and reset for the next trade. You know, this pattern, once it breaks out, maybe this is the end of it. Maybe it's going to have a retracement, and then we could figure out where to get in again. Or maybe a new pattern starts showing up here. So again, this was a little bit long-winded, but we had to kind of reset our pattern to what reality is right now and what's happening. On the daily, this is what we see, and we're waiting for the breakout here. Make sure you look for volume, something, you know, higher like this will confirm the breakout, and you'll see a nice impulsive push higher. So it'll come back and check. You might have to drop down to lower time frames to verify the check of this support line. Right now it's resistance. It's going to become support when a breakout happens. And once we see the price action break out above these all-time highs is where the trade really gets interesting, right? So again, just remember, I have it drawn as a single line here. You know, reality is it's a pretty big window. Well, I don't have to draw it again. I have something here. Reality is it's a decent window because you got these two wicks on the daily, right? So it's got to break out of this ultimate high for a true breakout of this pattern, right? I mean, realistically, maybe we should even be drawing the triangle like that. You know, maybe this. Really, to be safe, this is the breakout. You should be waiting for it to break out from here. So you have to bring this a little higher. This goes a little higher. you know, all this stuff moves up. Again, this is the process. You have to have patience. You have to be able to draw these on your charts so that you get good with it. Once you start seeing it without drawing it, that's good. But until you do have to take the time to draw this out so that you put it on your chart and you can see what happens. You know, the idea is here to put this here. This is basically your hypothesis, right? This is based on the chart action. This is what you think may happen with price action. And the nice thing to do is throw it on here and then come back. You know, we're talking, you know, this is not going to happen overnight. This is a daily chart. So this is going to take time to fall into place here. But you could see if it did what you think it would do. And if it didn't, then you could figure out where things may have shifted or things may have changed. And you can adjust from there. Like maybe you saw something wrong, or maybe it just didn't happen the way you think it would happen. So again, you gotta adjust these points. So this is what I see for the downside. This is what I see for the upside. You know, just wait for the breakout to make the trade. If you trade the downside, these are some areas of interest that you should be considering taking out of your position, building your position over here. And the same exact method that I showed you here with moving your stop losses up and taking profits would be the same thing you do down here. All right. So I really don't think it's going to come down to 70 something cents. We never know. I mean, it could. I mean, you had this flash crash all the way down. This is crazy. Look at this. It went down all the way down to 15 cents. I mean, if you would have had like a random order all the way down here, that would be awesome. I should actually throw something crazy like that in there in case it ever happens again. This was so fast. I mean, this was on a daily chart, so this wasn't really that fast. Let's go down to 15 minutes and see if we could see. Let's do auto. Maybe we can't see it on this. Yeah, this happened within a 15-minute, 1 hour window. Yeah, you can't see it on the 15. Well, this is where we are. All right. So be safe. Take the trade only after the breakout. Practice drawing this on your chart so you can kind of see where things may head, and then come back and look at it in a couple days. All right, next chart. Bitcoin. All right, Bitcoin. Let's see if I have anything here for Bitcoin. All right, so you can see that the D was actually hit. See this? This pattern has completed. It hit the target that we drew up here. And this D also, you know, relates to a previous high here, right? So you can see how the D is set to a peak, another peak here. So this was a double top. And you can see this double top. Ding, ding, and then price came down, right? You see that? And then over here, another one, M, another M, double top. Boom, price came down further. Here's a W. Right here, boom, 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 and price went up. So the M's and W's are very strong patterns. If you see them, you know, there's a good chance right here. This is downward facing, but it was still a W pattern. You know, more importantly, this was an M. This was a good M. It was downward facing, so that means price would come down. I mean, it wasn't good for the bulls because we don't want to see the price go down, but it was a valid M pattern. You know, right here. M, down, M down. And it's downward facing. So as we talked about on the channel a couple times, the downward facing double top means price will come down. An upward facing double bottom right here, boom, 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 boom. This is pitched up, so it signals that price may go up a little further. Now this was very impulsive, so you'd have to be quick to get in at this neckline. This would have been the trade entry right here, and it would have been on this one candle. After that candle, you basically measure the width of the W from here to the bottom, and then that would have been the target. And you can see the target was hit, but you had to have been, well, this is on the 4-hour chart, so you would have had some time, but you'd have to get into the trade and set this price level here. Otherwise, it would have been coming back down. And really, like I just showed you right here, this ended up making, yeah. So the target and the price hitting this ended up creating this downward trend line that we had drawn here. So this W was a successful trade. Just like this W, was less probable that it's going to change direction because it was pitched down, but it was still a double bottom. And in fact, what happened here was you went from having a double bottom, of an M looking like this, to having a head and shoulders, which now, that does signal an upward inverse head and shoulders, signals an upward momentum. And then we showed how the inverse head and shoulders target was this right here. I believe this is it right here. No, this wasn't it. I forgot which one. This might have been the target. This was the target from this bull flag. The target from the reverse head and shoulders would have been taken from the neckline. So basically this fib level down to here. And this still might be in play if it's not hit already. Okay. So look how interesting that is. It hit exactly at the negative 236. Identical. Look at that. How perfect. I mean, you can't make this up. And this Fibonacci negative 236 is based on pivots, right? It's based on the D being solidified. So from the low of the C to the D, and D was solidified, it hit right here. So this happened right here. Let's do the so now this negative 236 is still in play. Right now it's consolidating, and I'm gonna clean some of this up now so that we could talk about what's happening right here. So the D patterns, fulfilled. There is a negative bias on this pattern. This is a negative pattern once the D is completed, but we're gonna hope here. I see something happening right here that might negate that. Let's go to the object list and let me clean up a bunch of this stuff. Let's get rid of all the brush marks. I don't want to do that. Okay. Let's do here's some more brush marks right here. Boom, 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 boom. All right, we can get rid of this trend line because it's already done. It broke out. Although the trend line, we'll leave this because this target is still based on this breakout. So we'll leave that. Let's get rid of the D. Let's get rid of this pattern to clean that up. This is the reverse head and shoulders target that we just talked about. So we'll leave that. But now you could start seeing, you see how this is hitting resistance, 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 and now we're having higher highs here. This is another pattern. This is another triangle pattern. So we could draw a triangle pattern. I guess we could start it here, come here, hit this here, and then show here. Got to play with this a little bit sometimes. Really, that's what I want to show. Let's zoom in a little bit. And let's see where it makes sense to do this. Sometimes you got to take off this magnet to do it so that you can really tweak it in. So we know there's a resistance level here, and it looks like this, this ascending triangle is kind of falling into that area. So we could draw it like this. So now in this pattern, this is a bullish pattern because you got higher highs, and we're hitting a wall here, which is a resistance level based on this previous pivot back here. So what we're waiting, we got that little zone of resistance. Once price action decides to break up or break down, we can draw in another target. So the target's going to be from the A to the B of this pattern. From this A to the B. You take that and you put it at the point of breakout. So if you put it there, it's arbitrary because the flat line on top. Or you put it somewhere over here. I don't know. Depending on where you think it might break out, you don't know until it happens. But these are the targets. So you got the downward target of 55.5, pretty much. And you got the upward side of 63 and almost 63.2. So we got, this target was already met. So now we could kind of get rid of that green zone because that D was that pattern that was here before. The D was basically this green zone, so that was hit. So let's get rid of that. Now we got a couple targets. We got the reverse head and shoulders that's still in play. That's this one. We got the breakout of this current ascending wedge or triangle, whatever you want to call it, but it is bullish. It tends to break up more than down. So we got a target up here that we got to put in. Right. Again, this is just the previous high here, and then we got the pattern of the inverse head and shoulders to hit that zone, and then we got this pattern to hit this zone. So on the upside, those are the immediate ones. So there's 4 here. So again, maybe you do 25%, 25%, 25%, and then wait for the last one, and the same kind of theory that I had drawn here applies. Now I'm going to go through and draw these again for you, but you're going to have to start seeing the idea here, and draw those for yourself. So when the breakout happens, you're going to wait for it to test, and it's going to come up, and it might bounce in between here for a little bit, and it might go up again, and it's going to check it, and it's going to go up. It might get rejected the first time. You may go through again. Then it's going to come down and check. Then, there might be some wiggly stuff happening as it starts approaching here. Break through, check, and then we'll see what happens. It's a little too far in advance for us to really know what's going to happen. But this is an idea of how things could play out. And like I said, your initial breakout, you're going to put the stop loss a little bit underneath this trend line. And hope, once it checks and it starts bouncing off, the hopes is it's not going to come back into here. So once it starts pulling away and maybe you get up to this level, then you're going to move this to break even. Once it gets into this consolidating range, you're going to move your stop loss even higher. Now, and once it breaks through and it starts checking again, you might want to leave your stop loss here because depending on how much consolidation here, this might be a good support or maybe not. So you might want to leave that here until it really kind of comes up and hits the target pattern. Then from there, you can consider moving the stop loss in this range somewhere, and just continue following this price action higher. And that's what you do. You got 25% here, 25% here, 25% here. Where is? Okay, let's do this. You don't have to watch my horrible drawing, Again, so, you might consider taking profits of 25% along the way here. Then you let the rest ride. put the stop loss here and just let the trade breathe, you know. So you've scaled into a position down here, and now you're scaling out on the way up. And again, here's another target up here. So this last 25% you can let it ride in the hopes that it's gonna hit this next target up here. 69, pretty much 70,000, 69 probably. All right, so yeah, that's what I see for Bitcoin right now. I mean, it broke out of this channel, came back and checked it, like we always say. This right here is where you would have entered the trade. And as this is pushing higher, you know, this is the target for here. So this is the inverse head and shoulders. The target for this breakout of this channel is all the way up here at 65. So you still, like right now, you know, you already should have for sure your stop loss at least at break even. When you start seeing these pivots, something like this, you could start moving your stop loss up underneath this trend line and follow it to where it is. You know, stay underneath this because this seems to be a good support level, but tweak your stop loss higher and higher as you're going higher, so you're guaranteeing yourself more and more profits of this trade. If you got in here, you're guaranteeing yourself more and more profits as this price action moves up towards this target. All right. So anyway, it's very repetitive, but in case you're watching this for the first time, it's important. So risk management is the most important thing. Mindset, emotions, don't chase a trade, don't get greedy. Take your little wins, take those wins and compound to the next trade. Use the extra money you made on this trade for the next trade, and your account's going to continuously grow more and more. All right, we're moving on to Ethereum now. All right, so the pattern that we have drawn here is still not complete, but you can see a breakout happen. The breakout does have volume, and if we zoom in maybe on a lower time frame, you can see if it got checked. So you could see how it broke out, came back down, and bounced. So once it hits a peak, comes back down, and now breaks higher. This level right here, if you want to be safe, you know, as it breaks through this level again of this peak that it made over here, this is where you could enter a trade if you don't feel safe enough, because this actually didn't come down and touch. Now again, there's a zone here. It's not an exact, you know, line here that I have. So you can see there was a wick here. If you go further, so you can see there's more wicks. So there's a zone in here that's representative of the support structure up here. So that's why, you know, depending on where you want to enter the trade, you know, you could take it when it dips down and comes back up, but don't get too hung up on it didn't touch the line exactly, because as we see here, there's wicks higher. You know, if you look at this wick, if you look at this wick and turn on this magnet, you just draw a line here, you know, you can see where it's parallel to the other trend line, and if you do that, you could see where it came back and touched it and did bounce off. So this was a confirmation. Again, like I mentioned in this drawing, I'm going to clean up this drawing, but you got to remember there's a range here. It's not a single line, and you're looking for price action to come back down and test this floor. This becomes a floor. Under here, as it's approaching up, this is considered a ceiling. Once it breaks through, now we're seeing if it comes down and touches the floor and bounces off the floor like a basketball. Comes down, it comes down and bounces. Dribble, 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 comes down, boom, bounces up and goes higher. And that's what you're waiting for. All right, so we're gonna delete all this brush. Let me zoom out. Let me see where we are with things. And let's remove some of these brushes. And we can kind of reset ourselves. Okay. Oop. There I go with the brush again. Alright, so we can get rid of this. It's broken out. It's checked. So now we're waiting for these targets. We've got the D. We have to see what the target is for this breakout. So we go from the B here down to the A. And you get an idea where this is. Alright, so actually this target up here coincides with the D pattern. So this is the breakout that this is the target that we're waiting for here. Now, you can see now it's broken past the X, or the B, the peak here, and it's coming back and checking it. So if we drop down to a little bit of a lower time frame, so this could have been, you could have been out of some of your trade right here. Now currently it's checking to see if that becomes the new floor. So right now, it's broken through the level. Now it's coming and checking, and it's going to go higher, right? So you came out here. We came out here, came back down, went up, hesitated a little bit, broke through. Now it's in the middle of a check, and we got to wait to see if it's going to bounce up. So at a minimum, your stop loss should have been at break even already. Right now, you probably could move your stop loss a little bit under this area to guarantee yourself a guaranteed profit on the trade. And this is the next target. So maybe you got out of 25% of your trade, and you still have 75% in the play here. Ethereum, unfortunately, a lot of the patterns I'm seeing on here is showing a retracement. So almost all the harmonics that are coming up for all the cryptos are showing they're going to take a break and retrace a little bit. So just be careful, take your profits on the buys, and wait for the retracements to happen, and then we could reset for the next trade. So certainly consider locking in some profits here, so that and moving up your stop loss. So if the D isn't met and this pattern doesn't fulfill, you guarantee yourself some profits in this trade. So that's really all I gotta say about Ethereum. Nothing new to discuss. It's just breaking out. Let's see if it breaks through these levels, if D is hit. And then after D is hit, again, like I mentioned, this is this pattern right here is a bearish pattern. So it's anticipated that it's going to come back down and start hitting some sell targets. So again, I don't really focus on sales, but once this pattern is hit at 25, 26, the patterns are showing that it could come back down to the $2,000 level. After this 26 is hit. So certainly it could come back down to here and test. It's going to now test these this support level of X, right? So it broke up and it's going to retrace. So if you see a retracement like that off this pivot, we're talking about 0.5, 0.55. Look at that, almost exactly 50% retracement. So, and then the 618. So once D is hit, there is a negative bias that the patterns are showing that price is going to retreat, and it could come back down to 0.5, somewhere in this range. So if you're move up your stop losses and lock in your profits as it approaches the D, and then wait for the retrace. And then when it comes back down here, you can consider getting back into a new trade. And this price action could come down, and this pitchfork could be the lower end of the retrace. So this outer band right here, depending on how quickly this happens and how fast it goes up and comes down, if it follows this pitchfork, the retrace is going to be less and less, right? So if it happens now, it could come all the way down to 6.5 and still stay within this pitchfork. If it happens later, it might only come down 38.2%. So it might only come down to 21.88. It just depends how quickly things happen. So again, even if D is hit, we would have to we'd have to add this external 1.25, to allow for the D. So again, it could come down, if it breached the upper, it could breach the down. So, if it's going to go to the 125 line of the pitchfork, reality is it could still stay within this pitchfork in these extra extended lines and still come down to 618. So, anyway, right now, if you're in a trade, consider dollar cost averaging out as it's breaking through these levels. The DX, it broke through. Now it's testing it. Now the next one's going to be up here because now this is all price discovery. There's no knowing. You don't really know when the resistance sellers are going to start coming in masses and start selling again. So you have to do proper risk management. Once it broke through this X, now this is all new. The most ideal case is that it ranges a little bit and builds a new base so that when it breaks out, it's not going to fall all the way back down. It's going to now possibly test this new peak as a new support level. So the longer it takes and it builds a base in here, it's actually better for price action because like I said, when it breaks out, it's going to come back and this is going to be its resistance because it's ranging. It becomes support. So we anticipate it, if it ranges like this for a while, there's going to be a new support line that's developed here. And you hope that price action comes down and checks that and then goes up instead of coming all the way down, right? So this basing thing that's happening here is actually really good for building a base for it to go even higher, right? If it goes straight up, example, if it goes straight up and it comes straight back down. But if it goes up and then it goes like this, then it goes up. If it comes down, instead of going all the way down, it might just come down to there and check and then go back up, right? Because you got this line here. You got this new support line that was developed by this basing. Here, there's no support line. So it's going to fall back down to wherever the last ranging or baseline, wherever some support was developed. And that's all the way down here in the X and the B, right down here. This is where, so if we don't base here for a while, there's a chance it might go up and it might come straight back down all the way down to here. So this is actually good. So if we see a little bit of ranging before the next push higher, that's actually better for the longer term growth of Ethereum. Sorry, I lost my thought there for a second. So if this Fibonacci retrace from D to from C to D happens, this is where it could fall back down, but it also sets in place an algo target that even brings it higher for after the retrace is done. So we could see it go up to 2841 based on this pivot. If this D holds and there's a pivot here from the low to the high and it comes back and retraces, when it finally shoots back up, we could see a target up here, right? I mean, until there's you have to put in a high here. You got to put in a high somewhere, and the retrace has to happen before this algo target becomes in place. This hasn't happened yet. This is the possible future based on D happening. So wherever that pivot happens, we have to tweak. We have to move. We have to move this fib level to wherever the peak is before. If the peak is here instead of there, this gets moved. And when I move this, the algo target up here is going to move. So until we see what happens here, we'll leave it at D. And, this is a proposed target once D is in place. Right now, the only targets we have is this right here, which is D, and the pattern. The pattern target, which is based on this triangle, and the anticipated pattern of the bearish pattern D. And they coincide with each other. So it's high confluence that maybe price action will hit this 25. And then we got to see what happens. We got to see if it comes down and how far it comes down, the retrace. So if I were you, I would certainly consider taking a good amount off the table if it hits 25. You could leave a little bit more, but make sure you move up your stop loss to protect yourself. So that if it does turn south, whatever you have left in your trade, you can lock in the final profits as it turns around and goes south. But if it continues going higher, we don't know because this is all new area. We don't know what's going to happen, the momentum. So, we could find out that it just goes to the ceiling. You just don't know. But by not knowing, you got to do risk management. You got to move your stop loss. You got to, continually trail price action and lock in your profits. All right. Okay. Anyway, next coin. Link. All right. Link is currently breaking out. We could obviously see that let's clean up a little bit. So this upward pitchfork seems to be in play. This one didn't happen. Let's drop down a little bit. Yeah, so the downward one was not being held, so we can get rid of that. Let's get rid of that. All right, so that's gone. Looks like it already checked the support and bounced off, so you should be in a trade right here. This didn't play out, so we're going to start getting rid of some of these brush marks. All right, now let's see where we are. All right, so the breakouts happened. Now it's kind of coming back and checking it again a little bit over here. So let's get rid of this. This fib is based on this pivot that didn't happen. All right. This is the reverse head and shoulder target was hit, so we can get rid of that. Now we have this is the target of the breakout. So the breakout happened over here. This didn't happen, so we can get rid of the downward one. What else? Again, we can get rid of this because it didn't happen. So this is what's in play here. Now you can see we have to tweak the pitchfork a little bit. So it hit here a couple times, but it broke through. So what we can do is we just move this down to that bottom pivot. So we got a nice point there. We got a nice point there. And now this is, you could see here, I'd always talk about from X to A. Once X to A is in place, there's an 80% chance that price action will hit the median line. So it took some time, but after this pivot and it broke above, basically you wait for the retrace off this bottom pivot by 15 to 20%. Once that happens, there's an 80% chance that it's going to migrate up to the median, and it did. It hit the median right here. Now it's bouncing back, and it might play this little channel right here for a little bit as we move up to this new range. So, I mean, that's what I see right now. I mean, what could be ended up playing out at some point is we might see it stay within that that pitchfork level right there. And we might start seeing price action get squeezed into here and then have another pattern breakout. So, right now, if you're in a trade, this is the first target. X, this right here, X, you can see it was a resistance level, right? So there was some price action movement on this X. See this X? You can see how right here, it hit it, came down, hit it, came down. So X is, it broke through a little bit, but then when price action came back down, it just cut right through it. So X was not a good support level. Right now we're approaching another area of previous. Put this in here. You can see we're like over here. There was some support at this level, a little bit of support. It broke through, and then you had resistance on the upside. It broke through. A little bit of support there, breakthrough, a little support, resistance on the upside, and it broke through, resistance. So it's not a very strong resistance level, but it seems to be reacting to that level. So we might start seeing a pushback up from there. But as I mentioned, X could have been your first exit. B up here should be another exit for some of your trade. And we could see if something like this plays out. I mean, this might not be exact. Maybe instead of there, maybe this level is going to be the one that gets played. So we have to see what happens here and how this develops to really form a possible ascending wedge that I have just proposed here. We don't know if this is going to happen yet. We got to see what price action tells us. I don't see anything else. We got these targets that at 40, 44 basically. And you got, you want to consider taking some money out on 35, 7, 5, or maybe even 35.5 maybe. Take some money off the table. Take some money off the table at 45.5, 44.5. Just be smart about it. I'm not going to draw all those resistance lines and the breakouts and the stop loss, but apply that same methodology on this one as well. Right now, if you're in a trade, your stop loss should be a little bit inside this trend line. When it breaks up and checks over here, your stop loss should be somewhere over here. So proper risk management. I can't stress it enough. I'm sorry I keep repeating myself, but you have to get that in your mind as an important aspect of trading. And just don't let greed get you. There's always, like you can see here, every single chart that we're showing here, there's another trade. There's always going to be the next trade. Don't get married to a single coin unless it's a long-term hold. Again, there's a trading portfolio and there's a long-term hold portfolio. I'm speaking about the trading portfolio. So don't get anything in your mind that I don't believe in Chainlink for the long term. There's nothing like that when I talk about trading. I'm not getting into my long-term holds. My long-term holds, Bitcoin, Cardano, Ethereum, Chainlink, all the new DeFi ones. I mean, there's a bunch of good ones to hold longer term. But right now we're in this chart and on this video and currently on the channel, I'm just talking about the trading, doing trading from day to day or week to week. I'm not talking about years of holding coins. So just remember that. Just because I'm saying sell and get out doesn't mean I'm bearish on any of these coins. It's just a matter of keeping your head straight that this is trading. Trading is not, depending on the type of trader, you can do a day trader, you could do a swing trader, you could do a long-term trader. There's different levels of trading. I'm talking about scalp to day trading, where you're getting in and getting out, and you're just building your portfolio and the Bitcoin you have in your portfolio to ideally siphon off those profits from your trading account and move them into some longer term holds, right? So the more profits you're making in your trading, you can buy some coins to hold longer term, and that should be your goal, or cash out or use it for whatever you're doing. You got to come up with your own plan on that, but for me, it's just generating more money to decide on longer term holds. Right, so Bitcoin, Ethereum, Chainlink, top 3, Cardano. Those are the top 4 off the top of my head that are very bullish for the longer term. And every time we trade another coin to generate some more Bitcoin or USD, you move that into those longer term holds. Right, so all right, that's it. We're on an hour here. Sorry for the long video, but there'll be if you're watching this already, you know this, but if you're just seeing this part of the video and you didn't see the rest, there's timestamps in the video description. Consider subscribing to my channel, liking, sharing. Let's build the channel up to 2,000 members so that we can do a crypto giveaway. Just remember all the extra things I say here. It's just not, this is not a signals platform. I'm not just trying to push this video out here so you could take a trade. I want you to practice, and my idea is that you're practicing doing this on your own chart so that you can start seeing these things. When you start mapping out these resistance levels and these pitchforks, you could see, okay, well, maybe there'll be an ascending triangle that will show up later on. And knowing that, you could start playing this trend line, maybe start averaging into a position coming up in here. That's on you to decide what you want to do, but knowing or anticipating a possible pattern that no one else is even thinking about yet will put you in the driver's seat to set the alert so that you can, see that something is happening and then come back to the chart and look at it. You don't have to sit on this chart 24 hours. You draw this all up and then you start using the alerts feature. Like, for example, let's just say you want to know when price action breaches this level. You just put this trend line in there, you right click, you add an alert, crossing up. You basically decide how often you want to get it, and then that's it. You hit create. Okay, that's just basically, I'm showing this on the log chart. We take off the log chart, it's just basically gonna it's not going to look exactly the same as you see in a log chart is all it's saying there. But anyway, so now you can go onto your business, go onto another chart, do something totally different. And when this price action comes up and hits this level, you'll get an alert either on your phone, your email, Audible. You know, if I bring this down here, you can see what the Audible sounds like. I think I have the volume on. You know, this should be, it should kick in. So let's just want to show you an example of how that works. But anyway, yeah, that's how you do the alerts, and you just set them on your chart, and once it happens, the alarm will go off. I'm not sure why the alarm's not going off, but I don't want to slow you down. But basically, that's what you do. You basically put this line there, and you put the alarm on it. Then you're good to go. All right. All right, guys. Take care. Until next video, please consider subscribing, liking, sharing. Get this video out there. Let's build the community and see what happens here. One thing I just noticed that might play out as well, we could come back and look at it, is that there's an M, you know. There's an M. So we'll see if maybe this is the fake out. Maybe this is a head and shoulders. We'll see. If this price action breaks above this, I mean, we could still see a tilted head and shoulders. But let's see what happens here. I just kind of saw this M, but it's upward facing, so it's not as probable to change direction. If it was downward facing, like I mentioned in the earlier charts, it could show that it could be a change of direction here. So let's see what happens. I'm not holding my breath on this right here, but let's just kind of, we threw it on the chart. Let's see what happens. You know, maybe, yeah, I don't know. I really don't think it's going to be downward momentum here. I mean, this would signal, if this happened here, you would have a pattern here, and then you would have this, and then this would pretty much say that you come back into this triangle pattern, which drives it down to this resistance level. So let's just see. I truly believe that we're going to see it more approach something like this up here, where we're going to have an ascending triangle, and it's going to fight its way through 36 and go higher. So let's see. All right, guys, take care. That's it. I'm not going to keep talking. Take care.